Good morning, welcome to GrainTV. It's October 24th, 2012. I'm Logan Burgess. To my right is Brock Shimano. Brock, let's jump into fire tip here, see how the grains are trading in Chicago this morning. As you can see, we are up solidly across the board. As you can see here, soybeans and wheat, the leader to the upside right now. We have lean hogs and live cattle both trading higher. Crude oil trading down a bit. Dollar index kind of taking a breather after a big update yesterday, trading up about half a point, once again above 80. Outside market's relatively quiet though this morning. The big thing the grains are going to be watching is EIA ethanol numbers. Brock, I know you took a look at those. What's going on there?
We did get a slight uptick in the production of ethanol, 801,000 barrels per day. That's up about 0.5% from where we were last week. Versus last year, however, we're 12% behind where we were at this time last year. So that's a little bit concerning, but that is factored into current USDA projections. Stocks, however, we did fall quite a bit from where we were at last week. We fell about 1.17% from last week. Last year, however, we're quite a bit above where we were at this point in the marketing year, 8.5% above where we were last year at this time. You know, Logan, we've developed a new model here at GrainTV. Why don't you take us through what we found out?
Yeah, Brock, well, we did plug the new numbers that we just received into this model. If you take a look here, the red bars are weekly ethanol production. The vertical axis here is thousands of barrels per day in production. And then the green line here is the pace of production that we're expecting given the current ethanol crush margins right now. That crush margin takes into consideration spot price of ethanol, the value of those DDGs, and ultimately the spot price of corn as well. So as you can see here, this week's estimation did come in right in line with what our model is showing. But we need to keep an eye on this here moving forward. What do farmers need to think about when they're taking a look at this? Well, right now our model suggests that this marketing year, ethanol facilities are going to use about 4.375 billion bushels of corn going to ethanol. That's about 125 million bushels lower than what the USDA has outlined in their most recent October WASDE report. So it certainly opens the door for a revision lower there on bushels going to ethanol. Obviously, that's huge for the demand scenario in corn. Another thing that people are going to be keeping a very close eye on, you know, we're going to be getting the export sales report tomorrow, Brock. Corn's had some really lackluster weeks here recently. What are you kind of looking for there? What's going on?
We have had some pretty poor sales, especially in the corn market for export sales. We are currently ahead of pace to meet current USDA projections. I think a lot of that is due to the pre-sales that we brought into this year. However, you know, over the last few weeks, we've fallen quite a bit from our pace to meet the USDA projections. If we have another poor week, we'll probably fall below what the current USDA projections are.
Certainly. So right now the margins for both ethanol production and corn are very thin here compared to what the USDA is looking for. Certainly a revision in either one of those is going to be bearish for price action. We'll keep you posted on that here on GrainTV. Later today we will be getting export sales projections. We'll be tweeting about that on Twitter at GrainTV is where you can find us. But I think that wraps up our show here for Wednesday. Brock, thanks a lot for joining us. We'll see you tomorrow for the export sales report.